Welcome. Are you ready to dive into the world of investing? In this video, we're going to show you exactly how to get started with as little as $100 and just your smartphone. What if I told you that you don't need thousands of dollars or a degree in finance to start building wealth? That's right. With just $100 and the powerful device already in your hand, your smartphone, you can begin your investing journey today. The barriers to entry have never been lower. First, let's establish a foundational understanding by distinguishing between two very different financial approaches: investing and trading. Investing typically involves buying assets and holding them for the long term. Think of it as planting a tree and letting it grow slowly over years, capitalizing on compound interest. Trading, however, is a different beast. It focuses on buying and selling assets in the short term, sometimes within days or even minutes, in an attempt to capture quick profits. It generally involves higher risk and requires more active participation. Before you place your first trade, there are 5 essential terms every beginner must know. Mastering this vocabulary will significantly boost your confidence. Number 1, a stock. This is simply a security that represents a small fraction of ownership in a corporation. When you buy a stock, you become a part owner of that company. Number 2, ETF, or exchange traded fund. Think of this as a diversified basket of different stocks or assets that you can buy and sell as a single unit, giving you instant diversification. Number 3 is market capitalization, or market cap. This is simply the total value of a company's stock, telling you how big or small a company is in the market. Number 4, a dividend. This is a payment made by a company to its shareholders, usually quarterly, as a way to distribute profits. It's a nice bonus just for holding the stock. And number 5, volatility. This measures how quickly and dramatically a stock's price moves. High volatility means bigger swings, which usually means higher risk. Now that you know the basics, let's talk about where to actually execute your trades and investments. You need a reliable, beginner-friendly brokerage platform. For beginners, Robinhood remains a highly popular choice. It's renowned for its zero-commission trades and an interface that's incredibly simple to navigate, even on a smartphone. Its major pros include the zero-fee structure and the ability to buy fractional shares, meaning you can buy $100 of a $1,000 stock. The limitations are generally the fewer sophisticated research tools compared to other platforms. Since you're starting small and focused on long-term investing, a platform like Robinhood that offers fractional shares and is extremely mobile-friendly will likely be your best starting point. We now arrive at arguably the most important section of this guide: the psychology of investing. The biggest obstacle new investors face isn't market knowledge, it's mental discipline. The market will fluctuate, and emotional reactions can lead to costly mistakes. Remember, you are an investor, not a trader. Focus on the long-term perspective, ignore the daily noise, and stick to your strategy. This mindset is what truly separates successful investors from those who fail.